All right, I'm going to show you what is happening here in the metals, and maybe some of you will take the warning and be a little cautious. I know a lot of people will ignore me. They always do at bottoms and at tops. This is the 2010 or 2009-2010 breakout in gold. So we had a pretty long consolidation, not as long as the one we had now, which makes me believe that this breakout is going to go much further and probably longer than the one that in the breakout in 2010. This one only went for just a couple of years. But this is what is happening, I guess you'd say, sentiment-wise. So we had a long consolidation. We've had multiple tests of this resistance zone. Finally, we get a breakout, and in this particular instance, we get a quick retest. We're not getting that this time. But when you get a breakout move, especially after many months trying to build up the buying power for that breakout, then you get a very strong, very intense move on that initial breakout. And that's what we saw here in 2010. We're also seeing it right now in 2024. And that does a couple of things. That intense buying pressure, it stretches price a long ways above the long-term mean. In this case, I'm using the 200-day moving average. And so you can see price just got stretched really far above the mean. And it also creates sentiment extremes. I think it was maybe my second to last tweet, I included the sentiment chart of silver, and it is about as extreme right now, bullish, as we've seen in the last decade or more. And that's what happens during the initial breakout phase of a bull move. There's just a lot of pent-up demand, a lot of traders chomping at the bit. And so you get this very intense, almost semi-parabolic move. But at some point, there has to be a profit-taking event. And as I've explained many times before, when you get these parabolic moves, you just end up with a lot of buyers all along this parabolic structure. And that's just a lot of stops to get hit on the way down. Doesn't mean the fundamentals have changed or anything like that. It's just a normal profit-taking event. But because the buying pressure was so intense during this initial breakout, you end up getting a very intense correction. So the assumption by most people, I think, is that this really powerful initial breakout move means that any correction is going to be mild, and that's not generally the way markets work. Generally, the more intense, the more euphoric the buying phase is, then the more destructive the correction phase is. And you can see here, gold came down, didn't quite test that breakout, had a strong bounce, and then had to have another leg down to complete the test of this breakout before it could start the next phase. So we're going to get one of these. It's probably going to be intense. I'm pretty sure we're going to test that breakout zone between 2090 and 2150, and then you'll see what happens. You don't get that same intense buying pressure once the correction is over. You just don't have that huge pent-up demand once we come out of this first intermediate degree correction after the initial buying surge. And I think a lot of people are going to assume that when we get our intermediate cycle low, that we're just going to get a repeat of this. And I'll move this over to the current market here in just a minute. People are they've got recency bias, and they think that this is just going to repeat, and we're just going to go parabolic again and off to the races. But that is generally not, and I'm going to say again, I'm pretty sure it's not what's going to happen, because I don't really think we're going to start the parabolic phase of this bull market. I think we've got probably 3 to 4 years before this top. So once this breakout was completed, we had about 2 years into this top. I think this one is going to last longer. I think it's probably going to last about 4 years. Just much bigger consolidation, and so a much longer, more intense rally. So everything just keeps getting bigger and bigger as this bull market progresses. But I don't think this pattern is going to change, because I don't think human nature is going to change. So human nature has not changed. Our breakout phase has mirrored this almost exactly, other than the first initial retest. We've got the pent-up demand from multiple years of going sideways. Finally get the breakout. Everybody's piling in. Everybody's bullish. And then we get our correction back down to retest the breakout. And then we start the bull market advance in earnest, but at a much slower pace. Nothing like this parabolic move. So we do make higher highs during this next rally. So I think we can plan on that, but we don't go. You can see how far this stretched above this pivot here. I don't think that's going to happen during the next intermediate rally. So depending on where we top, maybe we get to 2,500, 2,550. I don't know, but the next intermediate rally, I don't think is going to go. Let's say, and actually, let me move to our current market. So here you can see this is playing out just like it did in 2010. We've had this long, frustrating consolidation phase for 3 years here. Actually, I guess it's been 3.5 years. So like I said, everything's getting bigger. The last consolidation phase was a little bit less. It was about 1.5 to 2 years, so it was smaller. And it produced about a 2-year rally after the breakout. This is much bigger. I think it's going to produce a much bigger rally, and it's going to be longer in duration. But the human emotions part of it is the same. The final breakout here has triggered a parabolic advance straight up as the buying pressure is unleashed from these 3.5 years of frustration. A toss-up. I tend to think we probably got a little bit more this week, but I do think we're going to top this week. These crazy kind of moves in silver are ending phases. They're not the beginning of something. So silver probably, well, I would say there's a good chance it could get to 35, maybe. It's not going to 50, but I think we could get to 35. And gold could break above this 2450. Maybe it gets to 2500, maybe even 2550. But then we're going to have our profit-taking event, and we're going to have to come back down and retest this breakout zone. Let me zoom in here. We've got to break this intermediate trend line, and you can see we're just stretched insanely far above this 200-day moving average. And again, if I thought we were going to immediately transition to the bubble part of the bull market, then I could maybe dismiss this and assume that we were just going higher and higher and higher. But I don't think. I think this is going to play out similar to how it did in 2010. And that means that we've got to have a corrective phase, and then we got to have multiple intermediate degree rallies and corrections along the way as this bull market progresses. And then towards the end there, we'll get our final parabolic bubble phase, where we'll get to my target is somewhere between 7 and 10,000. And I think that's coming, but I think it's probably going to be pushed out to end of 2027 or 2028. So, for anybody that'll listen anyway, if this continues to rally next week, and like I said, I think there's a good possibility it will, control your emotions, understand what is happening. This is the initial breakout phase after a multi-year consolidation. It is the the maximum momentum phase of the breakout, but it's going to trigger a very severe corrective move, not a mild corrective move like most people assume happens when you get this kind of a really strong rally. The unsophisticated investor that doesn't really understand how markets work, they assume that a really strong, powerful rally means a really mild correction, and then you're off to the races again. That's just not how markets work. Really strong, powerful moves that tack on a lot of percentage gain very quickly. Those are what trigger very severe corrections, not mild corrections. So understand that next week is almost certainly the end of this initial breakout phase rally, and a severe corrective move is going to follow that. There is a scenario where this could just go sideways, and I hope we don't transition into that, because that would be frustrating as hell. It would probably take us all the way out to August before we're ready for another leg up. So I am got my fingers crossed. I'm hoping this plays out as a very sharp corrective phase that comes down, breaks below this pivot. We get a failed daily cycle, breaks this intermediate uptrend line, and gets down here to at least get close to testing this 200-day moving average and testing this zone between 2090 and 2150. And then I think we're set up for the next intermediate cycle, which should be a lot less extreme than this one. So a little bit more difficult to make money, but we're still going to make money, because we should still make higher highs no matter where this top comes in. But it's just going to be a more gradual path to get there. And the next, I guess, 3 or 4, maybe even 5 intermediate cycles will play out that way. And then we'll have that final intermediate cycle where things just go parabolic crazy to the upside. And that's where we will get our final bull market top.